The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And getting on started today, had a good show this morning at the Bull Bear Binary Hour, and we got another Nadex conference coming up here. We'll have the details up on the website soon. It'll be another free conference you can attend, hosted by Nadex, and have Tommy and myself there speaking, and probably Dan Cook from Nadex as well. And we'll be doing that out in San Francisco here in sometime in the next 4 or 5 weeks. So make sure to be paying attention. TFNN will be, like I said, uploading that on there. And let's check it out right now where we got everything set. Now we got the S&P. Let's get all the indices flat. S&P's down about a point. NASDAQ up half a point. Dow down 6 points. The Russell down, or actually up now, a couple points on the day. And then looking over at gold. Gold has been moving today. It's down 29 points, totally being ignored by the index markets. And something's going to wake up soon. We'll see what's going to happen next. We got copper right now. It is flat on the day. Silver moving huge as well. Basically, same percentage move, about 2% as gold. And both of them down 2% on the day. We got our ags quiet as can be. Just up a few ticks on corn and down 2.5 points over on soybeans. On oil, we have it down $1.65 right now. So oil moving like crazy. Major drop in that commodity right there. Natural gas, though, surprisingly quiet. So usually getting a solid 1 to 4%. We're not even down 1/3% at the moment. Looking on over at our FX pairs. So we got the euro dollar down 8 pips. We got the pound dollar up 27. Aussie dollar's down 63. US yen up 66. US Canadian up 63. US franc up 15. Dollar index overall showing strength, and bond markets ticking down. So, and looking at the Nikkei moving up quite a bit, and with the U.S. yen rising, showing the yen's weakness, basically contributing to the Nikkei's strength. And so that's a quick market wrap summary for you. Let's go ahead and check out our fundamentals. And it's been a pretty quiet week overall in the fundamentals. And right now, let's see here. We got G20 meetings happening all day. They started up today. And we also got retail sales happening right now. Came out last night on the pound, hence seeing that a little bit bigger move, I guess you could say, over on the pound dollar. We'll come back and look at that here in a minute. And then had quite a few USD CAD trades go off, and had a decent move on the USD CAD. So would have worked out. That was the one pair I said to probably watch for morning hours. And then we're going to have preliminary University of Michigan Consumer Sentiment Report. That one came out at 9:55. So I'm checking everything out across the board right now, looking at what all we got. Let's go ahead and pull up. Oh, and then, of course, don't forget, G20 meeting going on tomorrow. That'll carry in a little bit. And then Sunday, nothing major happening. We've got some medium impact reports. Monday, Draghi going to be talking about, that's obviously going to affect the euro at 9:30. And then Monday night, monetary policy meeting minutes are going to be released on the Aussie. That should make a nice, good strangle trade for you over there on the Aussie. And you can do a straddle on the spreads or a strangle on the binaries. The straddle on the spreads are going to work out a little better on risk and reward for you, but they're going to expire like at 11 o'clock. So the move's got to happen in the a few hours there. If it doesn't happen, then you're going to have to hop on out. The binaries won't be as good of a risk reward on the strangle because they're going to go through the next day. They're going to go till 3 o'clock the following day, so there's a little more time premium built in there. But check out both, see if you have a good risk reward based on a 1 deviation move, and you should probably be looking for a solid 1 deviation on Monday. Now, also, we got a bank holiday Monday, and so banks will be closed in observance of President's Day, and that will cause, of course, lower liquidity and irregular volatility in the markets. So, if you are trading, there'll be some limited hours trading. There'll be different things going on. Let me see right here. I'll pull up the trading schedule for you and let you know about Nadex holiday hours. Let's see here. President's Day, they will be closed. So they'll be opening back up at 6 o'clock. So they will open up in time for you to take advantage of that Aussie dollar trade. And then going on over to CME. Let's see if I can pull up the schedule on that for holidays. And then we'll go in and we'll pull up President's Day. And there we go. Calendar for President's Day 2013. Gotta love Google, right? So it pulls up everything pretty fast for you if I just get the actual PDF document to load. But they actually put up a calendar for every holiday. So once that one comes up, then I'll read that off to you. But it's taking its sweet little time. See, me to speed that up. So, but anyway, so we'll come back to that here in a minute after it opens up. There we go. All right, got it. All right, so right here, looking over at February, and basically you got the different markets right there. I'll post that in the den as well for you. So you can look at that if you need to. And let's see here. Also grab that Nadex holiday schedule link for you. It's always good to know that if you're trading on Nadex. And if you're not, you should definitely be checking it out. Let's see here. There we go. And looks like we're going to have, Friday we got regular course, Sunday, regular hours on CME, CBOT equity products. But then Monday, regular hours, they're going to do trading halt at 10:30. Okay? So again, 10:30, they'll be halting it, and then they'll resume trading at 5 o'clock Central Time. So be aware of that right there. And then run over to the FX interest rate products, bonds interest, and FX pairs. They're going to do regular open. They are going to halt trading at noon and open back up at 5 o'clock Central Time. And then looking over at your NYMEX, your COMEX, your basically your metals and your energies. Then we can see right here that on Monday they are going to 12:15. They're going to do trading halt. Let's see, and then 13:15 halted products. So basically, that's a little confusing, but just the way they have it noted on there. But I would assume 12:15 would be the trading halt. 13:15 may. That's not even Eastern time, Central time, so maybe they have a typo. I have no idea. But the summary is they're going to halt it around noon, and they're going to open it up at 5 o'clock. And then for the CBOT, for your ags and everything else, KCBT, your grain exchanges, then you're going to be looking at the markets, opening up at 7 o'clock right there on Tuesday. And they'll be basically, you're really looking at a 7 o'clock opening for, again, those orders to go in for Tuesday. So just check those out, and you can take advantage of it. And they go through. They have all sorts of details on there, but very, very helpful links. All right, so that gives us a wrap-up on the holiday schedule. You need to make sure you're ready for that you know what's coming. And like I said, the one trade to look at for... Now, you could be trading the FX trade if you wanted to on, futures or Forex. But as far as Nadex... You won't be able to trade. They will be closed on Monday. So they're not going to close at noon. They'll be closed. And then, but they will open back up on Monday in time for you to hop in and start trading the Aussie dollar strangle on Monday evening. And then hopping on over to Tuesday, we're going to have a German Zoo economic sentiment report coming out at 5 a.m. That should affect the euro dollar. Would not be surprised to see a nice big move on the euro dollar right then. And a lot of Aussie medium impact reports coming out Tuesday night, so we could expect a 0.5 to 0.7 deviation move on that. Looking on over to Wednesday's markets, we're going to have the claimant count change, and we're going to have the MPC meeting minutes. Okay, so that's like their Fed Fund minutes, and that'll be coming out 4:30 over on the pound. And they have 1, 2, 3, 4 different reports coming out. Should be a very volatile day for the pound. Would not be surprised to easily see 1 to 1.5 deviations on the pound dollar. And so you could hop in on that trade if you're an early riser, early morning trader around 4 a.m. Eastern time. Going on over now and checking out the U.S. markets. We're going to have building permits. We're going to have PPI. We're going to have FOMC meeting minutes. So we'll have building permits and PPI coming out at 8:30 a.m. Eastern time. We're going to have FOMC meeting minutes coming out at 2 o'clock. Okay? So make sure you're ready for that one. And people just looking for interest clues. When are they going to stop the easing? When are they going to raise the interest rates? Are there any clues or anything in there? So the more they think they can see, the more volatile it's going to be. And so that might be like a gold, trade you could do. Now, the one issue is it does come out at 2 o'clock Eastern time. And the gold market itself closes at 1:30 in the pit. Therefore, the Nadex gold spreads stop trading at 1:30, and the Nadex daily and intraday binary stop trading. The intraday stop at 1, the daily stop at 1:30. However, the Nadex strangles or not strangles, but binaries do actually continue to trade. The weekly ones do continue to trade through 5 o'clock. So if you can find a good risk-reward trade on that, that could definitely be a possibility. I'd probably avoid currencies being so close to expiration on currencies. They actually settle out at 3 o'clock. So you're either going to be looking at indices or maybe a weekly gold binary on that one. And hopping on over to Thursday, we're going to be German flash manufacturing PMI coming out affecting the euro. And, euro. I can't, there's 1, 2, 3, 4, 5, 6, 7, 8. So you got 8 euro announcements coming out. You also have a franc announcement coming out. So a franc announcement I wouldn't be as excited about, but 8 different euro announcements coming out. We're going to have the Spanish 10-year bonds. That is something to watch. Schedule is tentative, so just be ready for it. Anytime after 3 o'clock, you could do a strangle or straddle. But at 3 o'clock, we have the French flash manufacturing PMIs. They shouldn't have a massive impact on the market unless they're just dramatically off. But then at 3:30, we'll have the German flash manufacturing PMI, the German flash services PMI. Then we'll have the Euro overall flash manufacturing PMI and the Euro overall flash services PMI. And then we'll follow that up sometime in the day with the French and Spanish bond auctions, Spanish being the biggest focus right there. Easily Thursday, looking for a 1, maybe 2 deviation move without too much struggle in the process. So somewhere around 2:30, actually, and 3 o'clock, you might be looking to do a strangle on the daily binaries. And you could even go in and do a straddle on the spreads. That'll take you through to about 7 a.m. The only issue is when the Spanish bond auctions come out. So if they come out, late, then, you may end up being better off with that daily strangle on the binaries. Now, checking out our core CPI, we're going to have a few other things coming out over here. Core CPI in the United States, unemployment claims. Unemployment claims have been a big factor. Core CPI being a measure of inflation. So change of prices goods paid by consumers, not including food and energy. Both of those being inflationary numbers. Both of those obviously having a lot to do with the Fed and everything else. And coming out nice and early in the morning at 8:30, that's a gold trade. So that's one you want to look at. Unemployment claims, now that unemployment is, now it's not necessarily the unemployment claims, it's the unemployment rate, the non-farm payroll. But now that they've targeted that to the quantitative easing that they're doing, unemployment has become back in focus. So I'd definitely be looking at that number for a potential gold spread. And we'll keep going. We'll wrap up the week here for the fundamentals here in the next segment. Stay right there. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And checking things out right now, just looking at where everything is sitting at. And we just, looking at the markets, they're starting to look like they want to tick on down. And from what I can see, we're probably going to start having a nice little pullback right here. We've been waiting on this pullback for pretty much the entire morning. But hopefully we'll start to actually see it now. Anyways, let's look right here. Let me pull this up. And open the charts up over here. There we go. All right, switch this on around to 10 minutes, throw on some deviations. There we go. All right, so if I go in and pull up the indices, so we got the S&P. Let me go ahead and throw a RSI on here as well. RSI is very helpful. Probably one of the most helpful indicators you can have on your chart. If you don't have it, suggest you add it. And I don't really use it that much to determine overbought and oversold. I more use it to look for potential divergences in the market. So what do I mean by divergences? Well, basically a reading that is, conflicting. So right here, see how this goes down and this goes up. All right, that's a divergence. That's where you're looking for your shorts. Okay? So that's where you're trying to find that drop down, that move. And once that divergence happens, then you're looking for a break below the previous bar's low. So you get that right here on this chart over here. Let me go ahead and clean up the bars a little bit, make them a little easier to see. And let's just make them narrower. I think that'll work. All right. So right here, what you see is this bar breaks below at this price right here. Okay. And then what you're going to do is you're going to tighten your stops on each bar that breaks below the low of the price there. So we're going to go over here and we're going to go, okay, well, what's the low on this bar? Well, the low is 1518.25. That's literally one tick, but it got it for us. So we're going to go ahead and move down our stop to this level right here. And now we're going to wait. So we have that. You could say over here we have a stop at, one tick maybe above this level. There we go. So when it breaks that, that's going to be looking to get out. And now our target is down to 1512.5 as all these longs, all these big bulls have been looking to just run this thing up. They got a 3-day weekend coming up. And, I know that you can trade the futures. I know you can trade the forex. But at the same time, you got all these stocks. And so you're going to want to, they're going to want to cover a little bit, take some of that profit, and enjoy their 3-day weekend. And so basically targeting, in my opinion, we're going to drop down to at least 1512.5 before the day is over. And took on a short on Russell and S&P earlier this morning in the show. And so looking for that to, S&P actually had the best setup, and looking for that to drop before, like I said, the day's out. Now, let's see do we have the same thing showing up if we go over and look at some other markets. So let's look at the Russell. Okay. And we'll have to adjust our drawings here. But let's see here. All right, so we got to move up right there. And we do have a divergence right here. We even had a divergence from it a little bit earlier as well taking place. So right now you got a short on. Now your stop is still going to be sitting up above this level right here. Okay. So which is actually a great stop, because what do we got? We got the half deviation mark. So I would probably go ahead and just move my stop right on the other side of that, because those deviations serve as excellent support resistance levels and have a pretty nice, tight stop on there. And that's if you're trading the futures. Now, if you're trading Nadex spreads, you don't got to worry about it at all. And we can go ahead and possibly bring up a spread in the middle of all this and see if we can find just a good setup that will allow us to take advantage of what's going on. Alrighty, so we pull up that chart for you, and it will be all set. So one more second. Sorry about that on the delay there. Okay, so what we can do is we'll check out the diagnostic spreads by using the diagnostic analyzer. Log in here, go over to box spread scanner, and like I said, we have the Russell. We also have the S&P. Let's go ahead and check out the Nasdaq too. We'll look at all 4 indices, and we'll see which spread is the best. So we'll do that right when we get back from this commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Market's just oscillating up and down and not getting a whole lot of movement. One thing we are seeing, though, is we're seeing a divergence on multiple markets. When that divergence happened, we did see the market come on down. It touched the settlement level right here, so we had about a half deviation move on the Russell. It hit that. It's starting to bounce back up. We'll see if it does make a move all the way back up. But we had a perfect divergence play calling the short. And would have been a hard, tight stop on that one. You only would have had a few points. We'll see if it actually does come back up and break through the half deviation or not. The other ones have not shown as much resilience so far. They are starting to pull back up right now at the moment, but we're seeing a very strong deviation over here on the Dow. It moved on down. It's coming back up, looking like it might try to fight the settlement level, fill that gap basically from earlier. And then right here we got the NASDAQ. It did not have so much of a strong deviation. It just more had, a lack of correlation. You had the RSI going flat while you have the market running up. And then over here, over on the S&P, we can see on that as well, we also had a very strong, deviation that led right to a bit of a sell-off right there and got, a solid 5 points or so to the downside. And if you were in this trade, this one did actually cross through. So you were able, like I said, to move your stop down. These have not crossed through to a level yet, so you have not been able to move your stop, and you'd still be in the trade. The Russell, we talked about putting it right there. The other two, if you were in them, you'd have your stops just above the market highs. And if you're, trading with stops, I don't like to trade with stops. I like to trade with Nadex because I can't get stopped. So I have till 4:15 to be right, and it makes it a lot less stressful when you trade. So right there, that gives us just a look at all 4 of the indices. And like I said, it's showing more strength in the Russell than anything else right now. So pulling that up, what happens when we go over here to the analyzer? And we're going to say, you know what, we want to look at potentially selling. We want to look at all the indices. Now, really, this should have been done earlier this morning, right around 10 o'clock Eastern time. Would have been the time to hop in on that. That's when we were actually talking about several of the shorts, and we did place a couple of those trades. But if we want to look at all of them, we want to go sell, then instantly, look at that. Indices pulled up. We get rid of that currency pair instead of having everything up. All right, which right here we have just a ton of spreads. Let's narrow it down. Let's say sell side. So now we got rid of all the buys. Now let's say, I don't want to risk more than $100. Okay, well that got rid of a whole bunch of them. And now let's say we want at least a 1-to-1 risk-reward ratio or better. And that'll get rid of even more. We may even say, I want at least 1.5 because it didn't make any sense to me to have only a 1-to-1. So we put 1.5 on there. And then we can, go in further and see if we find anything that, works better for us or if this is, the best thing we got. So I'm probably going to say that I want at least, I'd say 60 minutes until expiration. So at least an hour for the market to be able to do its thing. So that'll get rid of all those. And now we've narrowed down our choices from, basically over 100 different choices. Now we have about, 10 if we look at across all 4 of the major indices. And so now what we want to do is we want to pick out the few that look the best to us. And there's some easy ways to identify the ones that don't look that great to us. And the number 1 thing is going to be break-even distance. Number 2 thing is going to be time. But since we were able to use a minimum of 60 minutes in time, that got rid of a lot of them for us. So by doing that, we've now narrowed it down to now we're going to be focusing on break-even distance. I like this one right here. I have a $26 risk. I have a $70 reward potential if the S&P moves down to 1510. Do I see that as a potential possibility to move that low? Now, it doesn't have to move that low for me to be profitable in the trade. Just is that a potential possibility? And so I could pull that up and go, well, 1512 is a half deviation, so probably a couple points shy of that if I was saying this was my target, okay? And 1512 is my half deviation mark. Then I'd say, okay, well, I need to take about $20 off that so I can make 50 on a $26 risk if that trade works out. Now on this one, the one disadvantage, I have till 3 o'clock. I don't have till 4:15. So, do we have a better trade? Yes, we do. So right here, we have this trade and $30 risk. So about the exact same risk. And we're talking $1 or $2, not even 1 point away from being able to be break even on the trade. Has a $367 profit potential. I don't expect it to move that far. Okay, I'm going for 1512. So I'm basically expecting it to move down about 5-6 points from where it's at right now, and on the quote. So that'd give me about a $60 return on my $26 risk, and gives me to 415. Sweet. So there's our trade right there for the S&P. And what I can do is I can just click on this. It'll open up a ticket for me in the Nadex platform. And to make sure my price matches right there, 15.7.5, okay. And then hit place order. And very low risk. Now we're actually at about $25 risk. It's $26.80 if you include 90 cents on each side exchange fees. So that's why I actually factor in the exchange fees. I like to know all my costs when I place a trade. So got that trade on. Now let's see what's going on over here. Let's go down. I like that one. Let's check out the U.S. Tech, the NASDAQ. And we got some 3 o'clock ones. Actually, I have to move further. I don't like that at all. I'm going to check out the other 3 o'clock, see if we like any of them. That one has to move 14 points. I don't like that one. If I go down here, do I like any of the 3 o'clock ones? Let's see. That one might have potential there on the small caps, but they've been moving so slow. It's been my, I guess, least weak choice out of all of them. So, you know what? Probably not going to take that one. So I'm going to go ahead and I'm going to limit it even further. I'm going to move this on up to 90 minutes. That's going to drop out all my short-term expiration ones that we've been looking at. And now I'm able to focus on. So I got the U.S. Tech 100, and it has to move 3 points. That's a pretty decent-sized move. Well, let's see. What's our profit target? Because we only have a $7 risk on the trade. So, it might be worth checking out. So we go in. NASDAQ, we say, okay, we're moving down to 27.59. So if I'm going to take this thing off at 27.59, that's going to be 9 $5, $13. Basically, I'm looking to make about $13 at a minimum on this trade. I'm risking $7. That's almost a 200% return. That's not a bad trade. Now, this is, I think, one of the best things that you need to see, okay, whenever you're looking at this, is we're going in and checking out a trade right here, and what is the one thing you notice? They both have the same amount of time to expiration. They both have the same distance requirement to break even, okay? However, they also have the exact same risk. However, one of them actually has the ability to make more money than the other. This one does. They could actually make 90 instead of 20. So everything is equal except for the ability of this one right here to make more money. So if everything is equal, then that makes my choice pretty easy, pretty clear on what I want to do when I'm trading. I want to take on the trade that has more potential on it, and that's the one that has the $90 reward potential on the trade. So anytime that everything lines up like what we're looking at right now, and you see that, timed expiration and the break-even distance and the risk line up, you always want to take the one that is going to have more profit potential. Why in the world would they have two of them that are the exact same with more profit potential? This one started earlier in the day, okay? This one started trading at 6 o'clock in the evening. The longer it is from when it opens to when it closes, the wider the width. See right here, 100 ticks, the wider the spread is. This one started this morning at 8 a.m. So that's why we know that trade is there. That's why, it exists. So that makes it really easy for our choice. We have a 2-to-1 risk reward. We can take a really low risk. So, whatever your account size is, you can see there's definitely easily potential in here for you to place a trade. We got $5 risk. It's actually $6.80 with the exchange fees, and it actually be less than that if the trade loses. So we basically have $5 risk on this trade. We put that one on. Okay, so now we got a Nasdaq trade on. And then we're going to go over here, and we're going to look at the next trade. And now we have the Wall Street 30. Okay? So on the Wall Street 30 trade, and what we have on that one is we can see Wall Street 30, Wall Street 30. This one has 14 points to break even. This one has 3 ticks. Okay? And remember, Wall Street 30 moves in ticks. So that would go with the Dow Jones 30, the YM futures contract. So why is this one so far? Why does it have to move so far? Is somebody trying to mess me over? Is somebody trying to hose me on this? What's happening? No, what's happening is it's out of the money, okay? So if I click on it right here, it's further out. It's 13 ticks below the live price. That's why I'm actually seeing that issue on that trade, and that's why this actually comes out to be a better trade for me. And so often people will go in and they'll trade Nadex and they'll pick this low-risk trade. They're like, $13, I can make 280. And they don't realize, but it has to move 13 additional ticks for you to make anything. Okay, to even get your money back, it has to move 13 ticks. This one only has to move 3 ticks for me to get my money back. This one has a higher risk than all the other trades we looked at. We looked at one earlier, had $26. This one right here, $52 risk. Well, is that good or bad? I don't know. Let's go check out and let's look at the Dow and go, okay, what's our expectation? If the market does drop at the end of the day, how far down do we expect it to go? We expect it to go down to 13,907. Every spread on Nadex, every tick is always $1. So if I think it's going to go down to 13,907, then I'm going to sell at 13,950. That basically means I can make about $43 on a $51 risk on the trade. Well, the other two trades give me about a 200% reward based on my profit target. This one doesn't. So even though that one's my choice on the Dow, I'm probably not going to take it because I have a better risk reward on the S&P 500 and on the US Tech 100. Now let's go down and see what we got on the small caps, see if we have anything we like at all. And so looking over at the small caps, and we go, okay, well, this one expires, they all expire at 4:15, which is excellent. Okay, so we got all the other ones out of the way. And but these are out of the money, all right? So for a buy, and out of the money means the underlying is already below the floor. For a sell, and out of the money means the underlying is above. So like if we click on this right here, you can really see it. And it'll take a second, and then the chart will update for us. And what will happen is, you notice, see it, this is where the ceiling is. This is where the market is. So the market has to get inside this spread so you can make anything. It has to drop 5 points. That's 50 ticks on the small caps. And that's a big chunk. That is not worth trading. I don't care if the risk is only $5 on the trade. It has to move a huge amount for you to even be able to get your $5 back. So, is there an exception to this rule? Well, let's check it out. Is the risk reward there based on your profit target? So let's look at the risk and reward on these two based on our profit target. Let's say we thought the small caps, let's say, they are going to drop, all right? If we go over here and we look at the Russell, and it's pushing highs again right here. If it gets another high, we're going to have another RSI divergence. So our target can be, at this point, 921.50, okay? So if I sold this at 919, if my target's 921.50, I'm not going to make anything. I'm going to lose money. So, because I plan on getting out at 921.50 right here. So I want to get out at that deviation mark. And that's a pretty big issue because it's not going to help you at all because the floor is at 920. So, or the ceiling. So it can't even start making money until it gets into 920 range. So I don't want that spread. And that's what this helps you with. That's why that break even is so helpful. That's why seeing this out of the money versus in the money is helpful. See, if I go to in the money, notice how the live price is already inside the spread. That's why it only has to move 2 ticks to be break even. Now, it has a $56 risk on it. My target again, 921.50. Okay? So if my target's 921.50, that basically means I have 3.0. I have a $30 profit potential on the trade based on my target. I have a $56 risk. I don't like the trade. So even though that would be my choice, I have 2 better choices. I can make more money on my NASDAQ trade. I can make more money on my S&P trade based on the 4 indices, based on my profit target, based on the setups I'm looking at across the board. So now if I had to narrow it down even further, I'd go in and go, okay, out of all these, which one gives me the best looking setup? And the Russell's giving me very strong divergence. The S&P is giving me great divergence. So honestly, both of these are giving me great divergence. The NASDAQ is not giving me that good a divergence. Okay? So the fact that I do have a NASDAQ trade, the risk, again, very low, only $7. You can do the trade. But the divergence really has not been as good as I'd like it to be on the NASDAQ trade. I'll open that up for you, and you can see right here we got that nice run up. And, it fell down. We had that divergence, but, now it was still sort of flat on the trade. So out of all of them, I definitely like the S&P probably the best for the short setup, and it's continued to show more weakness. Like you see, the Dow has pulled down and actually come back up pretty, a good chunk of the amount. The NASDAQ has, it basically went up, went flat, went down, went flat. The Russell's pretty much regained everything from entry. And the S&P dropped down, and it's been trending up a little bit, but it looks like it might have a little bit of resistance, we're hoping, right here at this settlement area. And it's been hanging out right here for about the last, 30 minutes, going on 40 minutes now, where the S&P is hanging out right here. So we'll see how strong it can break through. It's coming through a little bit, but we need a lot more strength for it to come through. If it does, hey, trade may not work out as good as we want it to, but we had a stop earlier, and now we've moved our stop down. We'll still make some money on the trade from earlier, but on this one, we'll have to see where it turns out. This is sort of a late getting in entry if you're getting in at this point. I just want to take you back and look at what we were looking at this morning and sort of give you a way to teach you how to use the scanner. So that way when you are trading Nadex and you're coming up with your signals and you're like, well, I have 4 indices, which one do I choose? Well, that helped me choose. I narrowed it down and basically found out, this is my best trade. It's not my lowest risk one, and but it's my second lowest risk, but it definitely is the best trade out of the 4. Be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so we got a couple trades going on. We're going to see how they go. We're seeing the S&P starting to rise up a little bit right there. But it may hit our stop from earlier. If it does, then we'll have a small profit. But hopefully it'll move on down into the end of the day. If it does, then we get to have a nice larger profit. Now, understand we can take it off here, take a small profit, or we can say, you know what, our risk is pretty limited. It's only $30 on the trade, so let's write it on down because we can't get stopped out on the trade. Our risk won't increase. And when you're futures, I mean, you got to take your stops. If you don't take your stops, you're gonna get killed. But with spreads, you don't have to take stops because you already have a stop. You have a stop loss, but you don't have a stop trade, and you have literally until 4:15 for it to be right. So you don't have to be nervous. You don't have to be fearing like, oh man, don't get stopped out. I don't want to take another loss. Don't get stopped out. That means I have to put in more risk if I want to get back in. You know, what am I going to do when it happens? All the stuff you got to deal with as a trader. Then then it really would, take care of that. But anyway, so check that out and see, if it's something that might work for you. So how do you get access to this whole Nadex thing? Hop on over to tfnn.com. All right, click on the Nadex banner. Once you've done that, under our product, you'll get a demo link. And click on that demo link. You fill in your username, first name, last name, phone number, and email address. Click apply for demo, and you'll get immediate access to the demo. What they'll do is they'll send you an email. It'll have a password. As soon as you log in, by the way, go under My Account Preferences and change your password because you will forget it. And then you have to keep looking for your email every time you want to log in. And then go up here and just click log in. You'll get immediate access. Now to get a live account, it only costs $100. Doesn't cost. It only requires a $100 deposit. There's no platform fee, no data fees, no charting fees, no broker commission fees. So the only fees there are exchange fees. And, CME has exchange fees, I don't know, $1.14 a side. This is 90 cents a side. No fee if you had a total loss in the trade. So if you had $30 risk and you lost the $30, no fee. And also the fees are capped at $9. So if you do 10 contracts, $9 on that order. If you go in and do 100 contracts on an order, $9. And so as you know, those fees can add up. And this helps those fees stay in check, which is pretty cool. So to click start, you go from start to funded in about 5 minutes. Well, you're going to have some questions. You're going to know how this thing works. You're going to want to figure out the platform. So go to Diagnostic Box Spread Analyzer. Click on that right there. Fill in the information. You get an immediate access, 2-week free trial. You'll get tutorials on binaries, tutorials on spreads, tutorials on the platform. You'll also get immediate access to the deviation level, the scanner that I've been showing you. And that'll help you a lot because, like I said, it helps you narrow down which spreads to choose. Because if you have 26 choices and you got 4 different indexes, and that's 100 choices long, short, you can cut that in half. You can go down to 13 on each side, so about 50 choices. And I guess you could cut that down by 25%, just focus on one index, but you may not have the best index that you're choosing, like we just saw today. And so now you're down to 13. And then you got to go, okay, well, now I got to narrow it down. Well, only choose the ones that expire in a little, longer time frame. Okay, well, now you're down to about 7. And by the way, you're doing all this in your head to get down to that. Okay, so I'm just talking through it. Imagine actually doing it. All right. Once you've done that, then you got to open each ticket, or you have to know how to read and calculate P&L like in seconds in your head to figure out what the best one is, and flip through the different tickets. So, or you can just go onto a live data feed that filters everything for you and click a button and open a trade. So I don't know about you, but when I'm ready to place a trade, I don't have 30 minutes to find the best trade. I want to place the trade now. So, anyways, that's pretty much our wrap for the day. And I will see y'all next Wednesday. I'm going to be out for the New York Traders Expo. Come check me out. I'll be speaking at 11 o'clock on Monday at the New York City Trading Expo about Nadex. Would love to meet you in person. And I'll be back here Wednesday. Talk to you then.